We're coming to you live from the Exchange ETF Conference. I have Kevin Carter of EMQQ Global. Kevin, how's the conference been for you so far?
It's been great. It's always fun to see all my ETF friends, and as everyone knows, we've been, we haven't had conferences for a couple of years, so it's fun to be back in Florida and see everybody.
That's definitely a reoccurring thing. Great to see everybody in person. Great to see all the innovation that's going on here in the space.
There's been a lot of innovation that continued during the COVID. In fact, it probably spurred more innovation. People had more time to be thoughtful about what else they could do in the world.
That's right. That's right. So tell our viewers a little bit about your firm.
So EMQQ Global is an investment firm that is focused on one thing, which is the emerging markets internet story, which is a big story. So our primary offering is EMQQ, which tracks all emerging markets internet and e-commerce companies, China, India, Brazil, Africa, all developing world. FMQQ is ex-China. And then INQQ is an Indian version. But the story of what's happening in emerging markets is a really big deal. You've got billions of people, 85% of the world's people. They're becoming consumers. They want more and better food, more and better clothing. They want appliances. They want vacations. They want cars. And they want their kids to go to college. And that's the story. But what is even more exciting is that all of those billions of new consumers are getting their first ever computer. And it's not on their desk. It's in their pocket. It's a $60 Android-based supercomputer, basically, giving the developing world consumer his first computer, and it's also giving them the internet for the first time. And because these people don't have bank accounts, they don't have cable TVs, there's no Target store, these consumers are leapfrogging traditional consumption, and in many ways are more digital than we are. And the growth is undeniable. The revenue growth for the sector over the last decade has been about 38% a year.
Did I hear you say 85% of the world's population are in emerging markets?
85% of the world's people are in the developing world, emerging and frontier markets. And it's even more of the young people. About 90% of the people under the age of 30 are in the developing world. So this is both the world and even more of the future.
Yeah, so one reoccurring theme here at the conference is blockchain digital assets. How is that part of the world going to be impacted by those technologies?
Well, in many ways, emerging markets, the use case for cryptocurrency is even stronger. I mean, you have places like Argentina where interest rates are 45% and the currency is constantly being devalued. So there's a strong real world use case, I think, for crypto in emerging markets. And a lot of our companies, the internet companies, they are also sort of the crypto players and the metaverse players for that matter. I mean, if you're a Tencent, you're in a pretty good position for a lot of these different additional technology trends.
And now, why have a separate ETF that takes China out of the equation?
Well, first of all, I mean, look, the reality is China's a big thing. It's the second largest economy in the world. Its e-commerce market is 4 times as big as all of the other 45 emerging markets combined. So it is its own thing, and it's controversial. It's in the papers. People are afraid of China. I'm not, but the reality is some people are, But there's also a very strong investment case. We didn't make it because we were worried about China. We made it because if you look at the internet, there's been sort of 2 waves so far, and there's a third wave that's just starting. The first wave, call it 2000 to 2015, the United States. Amazon, eBay at the beginning, and it evolved. Starting in 2005, going to 2020, the China story. A billion people getting their first computer and getting digitized. This third wave that's starting now is the other 5.5 billion people beyond China, in India, in Indonesia, in Africa, Brazil. And e-commerce is right now about 25% of retail in China. So it's pretty well developed, even more than the United States. The other 45 emerging market countries, the FMQQ countries, e-commerce is only 4% of retail. So you've got very small penetration, a fifth the penetration, and 4 times as many people. So this third wave that's just starting is going to be a very big thing.
So for folks new to your firm, is EMQQ your flagship ETF right now?
Yes, EMQQ is and will always be the flagship. EMQQ Global is the company name, but the other 2 are just different versions of the same story. Again, FMQQ has its own utility for people that don't want China for any reason. It also allows you to capture that the earlier part of the story. in those other markets. And India, again, is its own special part of that story. And it's just now passed a number of public companies so that we could make the INQQ, that you need 20 companies to make an index, and the IPOs just to get there happened. But there's hundreds more coming. Goldman Sachs thinks there could be 200 or more Indian internet companies that go public in the coming years. So the India story is very, very early. You can think of it as China, the China internet story 15 years ago.
Okay, so let's do this, Kevin. I'd like to do a micro due diligence on EMQQ.
Okay.
So what is the process for constructing the index?
Okay, well, it's pretty straightforward. For all of our offerings, first and foremost, you need to be an emerging markets internet company. So it's a rules-based approach. And the first and most important rule, as you might suspect, is you need to be a business that matches the title of the fund, Emerging Markets Internet. Now, importantly, the databases for emerging markets make this complicated. A lot of these companies, they don't trade in the countries they're operating in. They may not be domiciled. And so we don't care what stock market you're on. We don't care what country you're incorporated in. We care about where the revenue is. So as long as you are generating your revenue in any of the 46 emerging or frontier markets, you're eligible as long as you meet our market cap and liquidity minimum. So it's very straightforward. We do limit the weight to 8%. So the largest company when we do a rebalance is at 8%, which...
So are you market cap weighting them?
It's market cap weighted, but it's modified market cap. So we put a limit of 8% on the largest company. That's largely because Alibaba and Tencent have been so much bigger than everything else. If we put them in at a full market cap weight, they'd be like 40%, and we would be out of the diversification rule. So put a limit of 8, and then we rebalance twice a year in June and December. If we get a big IPO, something that's over 10 billion in market cap, we'll add it 3 days after its IPO.
Okay. And where does this fit in a diversified portfolio?
Well, I'm obviously in a biased position, and the reason I made the fund was I could see all this growth happening in emerging markets, but nobody was making any money in the traditional indexes. And because if you look at what's dominating the MSCI, historically it's been banks, oil companies, raw materials, government-owned companies, which have tons of conflicts, tons of corruption. And so I made this to give people exposure to that, where the real growth is in emerging markets. So it's made for your emerging markets allocation, and again, I'm biased.
Of course, but it's a softball question by design.
My time, the 16 years I've spent devoted to emerging markets in China, it's made me question modern portfolio theory at all. Like if I'm a young person, if you're 30 or 20 or even 40, if you've got 20, 25 years, this is where the growth is. And the other important side benefit to the emerging market internet companies is in emerging markets, corporate governance is your biggest problem. Most of these companies, they're founded by locals, smart locals that go to the best colleges in the world, Stanford, Harvard, MIT, Oxford. So they're smart, they're well educated. They go to work for Google or Amazon or Microsoft. They get some experience and they decide, I want to start my own company. And then they're getting funded by Harvard and Stanford through a US venture fund. They're getting funded by people like Berkshire Hathaway. And so you also get this very good corporate governance. So it's made for your emerging markets allocation, but really if you're looking for long-term growth, 5 years, 10 years, 20 years, the miracle of compounding is very important in investing. And I can't think of a sector that's going to grow at a compounded rate as fast as these will in the coming decade plus.
Yeah, and based on that, this isn't a question. This is a strategic play, not a tactical play. This isn't a thematic investment.
I think this is the best way for investors to capture the growth in emerging markets. And I think it's also the best way for investors to capture growth, period.
To learn more about Kevin's fund, EMQQ, visit EMQQETF.com. Excellent. Hey, if you're here at Exchange, come on by. We're set up next to the Amplify ETFs booth. Thank you.